Hello, everyone. I'm glad to be here today. I will share my presentation with you so we can start. Just a few words about me. As June already mentioned, I'm the Senior Tax Manager at MyExpatTaxes. My background is in finance. I am an enrolled agent and a certified chartered accountant. If you wonder what that means, it is the outside of the US or the rest of the world, I would say, equivalent of the CPA qualification. So it's a UK accounting body. And I have been with MyExpatTaxes in the very beginning, almost 5 years now. I hope I will be helpful and I will try to address all the questions we have already collected and the new that will be coming, but don't worry, if I'm unable to address anything, we will try to help everyone who needs help. We'll give you our email address and you can email us and I'll try to reply every single one of the questions. But I believe that just be patient. By the end of the presentation, maybe most of your questions will be answered. So I will start with being a little bit more specific about the Fulbright grantees in terms of US taxation, and then I'll move on to more general topics that concern everyone who is a US citizen abroad. Because whether you are a scholar, a student, as soon as you are a US citizen or a US tax resident, if you are a green card holder, this is the same. These rules apply to you regardless. So I would say that there is a uniform view on the treatment of the Fulbright grants between the IRS and the Fulbright perspective. It's just a little bit different wording, but both the IRS and Fulbright define full grants, scholarship and fellowships the same in terms of US taxation. I will remove myself from the screen if you want to see the whole part of it. So it's not hidden anything, although you will have this presentation later, so don't worry. And maybe it's a good time to tell you that you don't need to write down everything. You have it. So don't waste your time. And you have the recording. So right into it. The Fulbright grants in very simple words, and the scholarships and the fellowships are considered compensation for services rendered and are includable in your taxable income. What is a common problem, I would say, is that it's not a problem, but it's a technicality that you will have to work through and determine yourself, is the fact that neither the Institute of International Education nor the Department of State are required to issue you a W-2. If you worked already in the US, you are used to get a W-2 form, which kind of suggests or guides you what to do, how to report your income. Unfortunately, this is not the case with Fulbright grants. You will not receive such a document because no one is authorized or required to do so. But don't worry, you will have for sure in the beginning your full grant authorization document It's a document you should have signed before starting your grant. And this document should outline the funds you received during your grant period. So for those of you who received your checks deposited into your bank account, you can also check your bank statements to see how much was deposited in any given year. And why I'm saying in any given year, there is a very important disclaimer I would like to stress on. Remember, in the current year, 2023, we are reporting taxes for the tax year 2022. And the US tax year is the calendar tax year. So the calendar tax year is from January 1st until December 31st. What this means for some of you who received your grants are receiving your grants in installments, you must be careful to not report something you receive in another year. So let's say you were given your grant in October and you receive a few installments, or you receive two parts in October, November, or a certain amount in October 2022. This is the only part you have to report as income in tax year 2022. The rest you will report next year. And next year you will be filing in 2024. So you should just remember to report anything that hits your bank account, let's say. The only instance I'm thinking when this advice won't be a good one, because I know that probably we do have in this webinar participants who are employed. So you receive your wages from the country where you are a resident. And if you receive wages, I would warn you against looking at your bank account statement, because when you receive wages, your employer already deducted some expenses for you and income tax. So what you get in your bank account is net, and you have to always report gross. So that's the only disclaimer. Please be careful. If you are a salarized employee indeed in a foreign country, don't look at your bank account. You look at your wage statements, payment slips, whatever you receive. Moving on, there are two.
Milena, could I just make one comment?
Yes.
Some of you who are joining us are ETAs. That's the grant that you will have received. Mm-hmm. Just so that you're aware, the USTA, where it says here, are employed, the teaching assistants, the USTA is the version of the ETA in Austria. So if you are an ETA, you don't need to worry about having received a salary. That is specific to the teaching assistants in Austria.
Yeah, thank you. Thank you. So there are two types of income categories that the Fulbright grants can fall into. The first type is fellowship income. This is most typical for students. And the next is compensation for personal services. It is common for teaching assistants, as already mentioned. And if you are employed, then you receive a salary. And if you receive a salary, it's wages. Now, the question is when these, the amounts I received are tax-free and when they are taxable. There are very few cases where you can have a tax-free, even if it's a scholarship or fellowship grant. If you are studying abroad, unfortunately, and I'll try to explain why. If you look at the broad definition, when a scholarship or a fellowship is tax-free, it looks as if any educational institution would be a qualifying one, but it's not like this. So there are two conditions to be able to treat the scholarship as tax-free. First of all, and most importantly, you have to be a candidate for a degree. If you're not, everything else is irrelevant. You don't have to brainstorm even for a second more. If you're not a candidate for a degree, everything that you received is taxable. If you are a candidate for a degree, there is another condition. It has to be at an educational institution that is qualified. And what is an eligible institution for the US is something that is defined. If you are unsure, first of all, you have to ask you can ask your university. But in general, an eligible institution is a educational institution that is participating in a student aid program run by the US Department of Education. And unfortunately, there are very limited number of such institutions outside of the US. If you are unsure, there are, of course, such institutions mainly in the UK, in Canada, a few in Italy. There is a list. If you go and Google what is an eligible educational institution, you will end up at the IRS webpage, and you can see there is a huge database, and most of the universities are US based, but there are a few that are outside of the US. So automatically, if you are receiving a grant, scholarship, fellowship for studying abroad, even if you are pursuing a degree, unfortunately, this means that most likely you will not be able to treat your any portion of it as tax-free. But if you can, I will continue with the other conditions. There is one more. The amounts you receive that can be tax-free are the amounts that you pay for tuition and fees required for enrollment or attendance at the educational institution, or fees for books, supplies, equipment required for courses at the educational institution for everyone. So if you do, and funny enough, the IRS doesn't think that the room and board is mandatory expense. So room and board, everything you pay or you receive for room and board is not qualifying expense. So it is taxable scholarship in this category. Everything that you spend for additional equipment, consultation, anything apart from these specific categories is not, just something you keep in mind. So I would say everything else is taxable. I'm sorry, I have to put it that way. Anything that, again, incidental expenses, travel back to the US and to your host country, and especially amounts that you receive as payment for teaching, research, or other services that are required as a condition for receiving the scholarship or fellowship grant. There are very few exceptions when you provide services that are required by the National Health Service Corps Scholarship Program, the Armed Forces Health Professorship Scholarship, and the Financial Assistance Program, but these are just very few. Everything else should be reportable and reported on your US tax return. And because I know that this is a confusing point for many US taxpayers, I would like to clarify a little bit more what is gross income. So gross income is everything. As soon as you are a US citizen, you have your passport, everything you earn in the US or abroad is your gross income. So imagine if you have a summer job, or if you, in addition to what you do on a regular basis, you are a freelancer, some side gig. You have interest income from your bank account. You have, for example, rental income from property in the US you rented out, or you have investments in the US. All of these buckets together are your reportable total gross income. Wherever you go, as a US citizen, you have to make sure to report your worldwide income, regardless of where you are. Again, don't forget, this is relevant for many of you, I believe. The taxable year for the US is the calendar year, January through December. And you have to think in terms of, I would say, I would use an accounting term, but I think it's pretty clear. It might be helpful. Think about the cash flow. What came to you or was paid for you on behalf of you to someone else during the calendar year? What hit your bank account or your institution's bank account from whoever is the payer in the calendar year? And don't miss something. So just make sure that if you received gross payments at once for periods that cover more than one calendar year, you spread those correctly within the tax years. How do you report your income on your US tax return? There are very minor differences, as I said already, whether it's a grant, scholarship, or compensation for services ending up being in the category of wages. Everything goes in the end in one bucket on your tax return, and it will be shown as wages. We do recommend to Fulbright participants it will be most likely benefiting the most from the foreign earned income exclusion. I will go into the details of this expat benefit in a bit more. Just the basics is we do recommend this expat benefit path because Fulbright participants tend to pay little to no income tax in the local country, especially in the first year they are abroad. So the other most common expat benefit, the foreign tax credit, might not be useful due to the mere fact that you didn't pay foreign tax. To use the foreign tax credit, you have to have paid foreign tax somewhere in another jurisdiction. If you pay taxes in the foreign country, of course, you definitely can. And I would say it's or other things being equal, the preferable choice to use the foreign tax credit as soon as you can, of course. What are the common Fulbright taxation issues? Again, being sure that you understand the scope of what you have to report. So it is everything. It doesn't really matter where you are. Foreign income, US income, everything should be bundled together and put into the right category, of course. But if you have to think whether should I report my foreign salary? Yes. Should I report at the same time my US paid internship? Yes. To be able to claim the foreign earned income exclusion, there are more conditions, but the most useful one for Fulbright grantees, I would assume, would be the physical presence test, which means that you have to be mindful and watch out that you have to be abroad physically for at least 330 full days. Something else, which is pretty common for everyone, especially during the first year you move out of the US, please don't forget that you do also in the US have to file state taxes. As soon as you lived in a state that imposes income taxes, especially in the first year, you will probably have to file your state taxes. So just remember, because this is something that a lot of expats tend to forget. A little bit more about the foreign earned income exclusion that most of you will probably end up using, and what are the requirements about it. So there are two types of tests that you should meet to be able to use the foreign earned income exclusion, and it's one or the other. You don't have to satisfy both. I am not gonna go into too many details about the first one, but just to give you, I will just mention it because I'm sure that among so many people today, there will be for sure someone who is a bona fide resident of a foreign country. A bona fide resident means that you should have been for at least one full calendar year already abroad. So this will be relevant for someone who is an expat for some time, for more than a year. And you will be a tax resident in the foreign country. This means that you should have spent the whole tax year. You probably pay taxes in this foreign country, or at least you should if you earn income. But even if you don't, if you have your long-term visa, you are settled in the country, you live for one calendar year full, you can say you are a tax resident in this country, and you can use the bona fide residence test. You don't have to worry about the number of days you spent in the US. And that's why it's preferable, but it's rarely applicable, especially in the first year you move out. That's why I'm going to get into the details of the physical presence test, because if you fail the bona fide test, you are not for more than a year abroad, you moved relatively recently, you have another option, don't worry. It's the physical presence test. This means that you have to have spent 330 full days physically present outside of the US. It doesn't state in which country. It can be multiple countries. You can move from one country to another. The most important point is that you have total of maximum 30 days, 36 days spent in the US. And these 330 days must fall into 12 consecutive months. I will give you an example because this is very theoretical. Let's say you moved abroad in summer of the 2022. I have a typo here. I'm really sorry. It is October 2023, the ending period. But let's say you move. I will make sure to correct this before you receive the presentation. You moved abroad in the summer of 2022, let's say 1st of August in 2022. You will satisfy the physical presence test in next August or 31st of July 2023. 3 this year. In practical terms, as soon as you didn't, in the meantime, you didn't spend more than 36 days in the US. If you just went and traveled back for the holidays in December, let's say for Christmas, and you spend 10, 15 days there, you don't have to worry, you still do qualify for the physical presence test. But if you end up staying 40 days, then unfortunately will fail the test. But let's say you do stay just for 2 weeks, 3 weeks, less than 36 days. In practical terms, what this means is that you have to wait until August 2023 to file your taxes. That's the only thing you have to take into consideration. And I will explain more that this is not a problem. There are automatic and forms to file for an extension. This shouldn't worry you. Just be mindful that you might need to postpone filing your taxes so you can qualify for the exclusion. And one additional disclaimer here, if you do qualify, please don't forget that the compensation income goes with you. What I want to say is if you go to the US for holiday, you just have to be mindful about the number of days. But if you go for business, so you work from the US remotely for your regular job, you do whatever you do just from the US, this means that you cannot exclude this portion of the income. So you have to, compensation income is sourced wherever you physically work out from. You still can use the exclusion if you are mindful about the number of days and you satisfy the physical presence test, but the number of days that you work in the US will be allocated. So this part of the income will just not fall into the excluding category and it will be fully taxable in the US. If you do pay taxes abroad, you can use a foreign tax credit for this portion of the income. They cannot use the foreign income exclusion for it. If you didn't pay taxes abroad, you will have to pay tax for this portion of the income in the US. Okay.
Milena, can I jump in with a quick question for clarification?
Sure.
You mentioned that you can claim the foreign earned income exclusion if you're a bona fide resident. What if you are moving from country to country without actually becoming a resident of those countries? The physical presence test would still apply to you, right?
Yes, definitely. That's where it's most useful. If you are the so-called digital nomad, you are moving from country to country and you never register. They don't know about you. You just work from the territory of this country. You never become a resident. You are still abroad. You just have to be physically outside of the US for 330 days. Irrelevant if you pay taxes or not, if you were a tax resident formally in this country or not. You can use it. Okay.
Perfect. Thank you.
So next, I will move on to a little bit more general topics about US citizens and green card holders and what are the filing requirements, because these will be relevant for everyone, regardless of what you do. When we get to the questions part, I'm sure we'll have a Fulbright specific question. I will be happy to address those, but probably you have some other topics to be and you are curious about. So let me dive in directly. Again, I already mentioned that you have to report your worldwide income when calculating your gross income, not only US source income, don't forget that foreign wages is also worldwide income. It is included. You have to report it. I'm not, this sounds scary, but it shouldn't be, because most expats don't end up paying taxes. You just have to be mindful to report it. The reporting and paying taxes are two different things. And I would say that there are, of course, instances where a US expat ends up paying tax in the US, but in most cases, they don't. You just have to make sure there are enough expat benefits, there are tax treaties, there are ways to optimize your situation. You probably won't pay tax. Just make sure to do what you should do, report it correctly. What are the filing thresholds this year? I would want to make a few very important disclaimers here. So if you notice the numbers on my screen, there is a threshold. If you are under this amount, if you receive gross income as a single person, for example, and your gross income is under $12,950 for the calendar 2022 year, you don't have to file a US tax return. However, the filing thresholds are dependent on one side, what's your family marital status, single, married, filing jointly, married, filing separately, but also they depend on the type of income. If you notice, the last one here is self-employed. So if regardless of what your tax filing status, single, filing jointly, head of household, if you are self-employed and you make over $400 US in net self-employment income, you have to pay to file your US tax return. So please be mindful about that. It's not just the filing status, it's the type of income. And if you notice, there is one ridiculously small amount here for the married filing separately filing status. If you exceed $5, which is nothing, for gross income per year, you have to file. So this would be relevant for anyone who is married and chooses to file separately from their spouse, or in most cases for expats, it's relevant for anyone who is married to a foreign person, so non-US person, and you don't want to involve your spouse to get them into the US taxation system. You can, there is an option, but it rarely makes much sense. I would say very few people to choose to do so. And probably you will need to, you don't have a choice. If you are married, you cannot file single. These are not tax filing status that you can choose from. It depends. If you are single, you file single. There is some room for a choice. For example, when you are married filing separately and you have qualifying dependents, mind you, the qualifying dependent is not your foreign spouse, unfortunately. You could file head of household, but otherwise it's relatively straightforward. It's set up for you. But this year, it's not it's not a hot topic, but I would like to mention it because there could be some of you who didn't get your stimulus checks the prior 2 years. That's why I want to mention here that even if you don't meet the filing requirements, there are some cases that you might want to file to claim any potential refunds. The most often it was very hot topic, I would say, the prior 2 years with the stimulus checks, that every US citizen with a valid social security number, was not claimed as a dependent and was under a certain income threshold would be eligible for. So if you didn't receive those checks yet, you still can do so if you never filed taxes because you are for some time abroad. You didn't know that you should file. If you never received your stimulus money, please consider doing so because you still can get them. I can address more of these questions later if you think they are still relevant. What are the filing deadlines? This is an important topic and something you should always have in mind. There is the usual filing deadline for any US person is April 15. It's April 18 this year, just because it falls on during the weekend, the 15th, and when there is a holiday, it's just extended a few days ahead. That's why it's April 18th, 2023. And if as of this date, you are abroad, so if you are an expat, you are granted an automatic extension to file your taxes until June 15th. Now, please make the distinction because April still remains the deadline for payment. And you should make sure to, if you're not ready to file, to make probably a conservative estimate if you think you might owe something to the IRS, to make an estimated payment, something you think, what if you are totally lost and you don't know, but you paid tax last year, maybe just take this number, pay to the IRS, and then whenever you file, if you overpaid, you will get a refund. In this way, you will avoid interest and late payment fees. If you are not ready to file by June 15th, you can get another extension to file until October 15th. Again, it's 16th this year because 15th is Sunday. This extension, though, is not automatic. You have to do something about it. You have to file Form 4868. If you choose to file with MyExpatTaxes, this form is filed for everyone automatically. You don't have to think about it. If you're not ready with your taxes by June, we will file it for you. It's no additional cost. It's just done for you. It's handled. You don't have to worry too much. But if you choose to file your taxes yourself or with another service, just be mindful. It's an actual form you have to file. It's not automatic. And because I have seen clients who do file with TurboTax or other softwares they are great for US taxes, but they are tricky when you file as an expat. It is automatic, the extension until June, but there is a statement you have to add to your tax forms to let the IRS know that you are abroad. Because if you use your US address, or even if you don't, there is no way for the IRS to know that you are abroad. There should be a statement. Here is the time, I think, to mention that if you never filed, or you filed but you are abroad for some years and you didn't know that you should continue filing, despite this fact, you can file your back taxes. You shouldn't be scared about it. There is a the IRS has this amnesty program for it is a voluntary disclosure program, let's put it that way, exactly for expats who didn't know, weren't aware of the fact. It requires you to file for the prior 3 years plus the current year. I am mentioning here the program in the deadlines because there is no deadline for this program, kind of, because the deadline is already passed. So you should do that as soon as possible. And again, I would also like to again mention that if you never filed, probably you are missing out at least on the 2020 and 2021 refunds you could get. I encourage you to think into this direction if you haven't already. Again, I hope all of this doesn't seem too scary, and I'm gonna dive in a little bit deeper into the different options that you can use so you can see that there is a way out. Filing doesn't mean paying tax. And there is 3 main different ways you can use to optimize, and I wouldn't say avoid, but because you can not avoid, but you can optimize your taxes, and you should be relatively sure that you would never be double taxed. I'm not saying this is impossible, but there are cases that you could really be taxed twice in the foreign country and in the US, but this is relatively rare. Usually you will pay tax, but you will pay tax in one country. You just have to make sure you file in both countries. If you are required to file in both countries, you are always required to file in the US if you earn enough. Probably if you are a resident in the foreign country, you have to file in the foreign country. You just have to follow the deadlines, file in both countries, use the proper forms, and everything will be fine in the end, because you will pay net just once in the one country that will take its portion, and it will be divided between the 2 countries, usually in a very reasonable way. So you have 3 options. I again will start with the one that's probably most relevant to you, the foreign earned income exclusion. What does it mean? In practical terms, you can exclude over 100,000 UK or foreign earned income from US taxation. I will be stressing on the earned word here, because you cannot use the earned income exclusion to exclude passive income, for example. It's for income you work for, so compensation for services, self-employment income, those sorts of income types. Anything that's investment income, for example, interest, dividends, rental income, it's not possible. It's not the place to use it. It is relatively easy. If you want to do it yourself, you definitely can, I think. It's absolutely doable. Just be mindful if you have to use the physical present test, if you're not a tax resident in a foreign country for more than 1 calendar year, there might be a little bit of calculation necessary to determine which is the most beneficial and useful period for you to use, and the timing when you can file to use it. Otherwise, it's relatively straightforward. It's a great choice for also expats in low tax countries, because you can use the physical presence test regardless of the fact whether you pay taxes or not. You are abroad for 330 days. You have your tax home in the foreign country, period. The IRS doesn't care if you do, in fact, pay taxes or not, as soon as you qualify. There are some not so great things about using the foreign income exclusion. There is always the flip side. Automatically, when you use it, you are disqualified from getting the additional child tax credit. And this can be a significant drawback. It can limit your IRA contribution limits. I can get into more details. I saw there is this kind of question in the questions I already received, so I will address at least one. And there are some rules to revoke it. So what does it mean to revoke it? If you use it for 1 year and you don't use it the next, even if you don't make an explicit statement that you are revoking, you are considered revoking it. If you are abroad and you don't use it, you kind of state to the IRS that I'm revoking this choice. And if you revoke it, you cannot make it again for the next 5 years. That's a limitation the IRS has imposed to make people think a little bit long term and not flip-flop between what's most useful to them. The next expat benefit is the foreign tax credit. It probably is familiar. You can use it to offset what you owe for the foreign income in the US. Whatever you pay in the foreign country as foreign tax can be used again against the US tax owed. I have marked this level of difficulty as difficult simply because it involves a lot of calculation. It's pure math. I don't know why the IRS has made these forms so complicated, but if you filed already and use the foreign tax credit, probably you are familiar with the fact that there are 1,000 forms included in your package, and they are all marked foreign tax credit form 1116. That's why I'm saying it's difficult. There are a lot of limitations and adjustments depending on your income that has to be made. It's definitely, it can be done, but I wouldn't recommend it if you have more than one source of income, especially to do it yourself without professional help. I would even say I haven't seen even a professional tax software that can automate 100% of this form without any tax preparer involvement. So I wouldn't try to do this myself unless it's really just one type of income. But it is a great choice if you can use it, because it can give you a chance to claim the additional child tax credit if you have children under the age of 17. It can get you up to $1,500 without you have to be owing anything. You will get the refund if you are eligible for it, and you can still, it will give you a chance to show earned income on your tax return, so you can contribute to an IRA if you want to. And the other choice is, the other option is the fact that the US has entered into various tax treaties. So there are cases where you might need or want to use a tax treaty to avoid double taxation. It's relatively difficult, I would say, because it requires you to know a little bit about international tax matters. You have to be able to read this specific language. They are overwhelmingly confusing for non-professionals. So I would be, again, cautious to use this myself if I'm not in this field. But they can definitely help you if other choices are exhausted to optimize your tax situation. Let's not forget towards the end the FATCA. This is the so-called double reporting requirement, the Foreign Account Tax Compliance Act. Why it is called double reporting requirement? It's double because on the one hand, the foreign financial institution is required to report US-related US clients' assets to the Department of the Treasury. So nowadays, I would say pretty much every bank in the world, with, of course, there are exceptions for some countries, but most of the countries and almost every single bank does have an agreement with the US, and they automatically report every bank account a US person holds with them. That's why probably you already know, if you try to open a bank account in a foreign country and you give them your US passport, they will hand you a bunch of forms to sign. It's really overwhelming. But they do it because they have to do the same you do to report those accounts to the Department of the Treasury. It's double because the bank does it on one side and you have to do it yourself. So you have to self-confess, self-report your financial assets to the IRS and to the Department of the Treasury. There are two forms that you have to think about. I would say mostly one, because this is the FBAR. First, think about if you have then over 10,000 US dollars, more than 10,000 US dollars at any point during the tax year cumulatively, then you have to file an FBAR. I will get into an example in a bit. And if you do have more than 200,000 cumulatively foreign financial assets, you have one additional form to file. This is Form 8938. Again, if you do use MyExpatTaxes, it is a great choice because there is no other tax software I'm familiar with that does file the FBAR for you, but we do. And it is, as soon as you reply the questions, it is figured out for you. Do you need an FBAR? Do you not need it? Do you need Form 8938 or not? So let me give you an example about these cumulative more than 10,000 US dollars at any point, because I know it is confusing. So let's say you have 3 bank accounts. One is in the US, 2 in the UK. The US account is definitely something you shouldn't worry about. It's not foreign financial assets, you forget about it. What about the other 2? If you have a UK bank account, let's say with 5K British pounds and another one with 6K, you do have 11,000 cumulatively. So you do exceed probably the maximum amount for the year. But what about the at any point definition? At any point means that if you, for example, if you got your Fulbright grant in June, let's say, and your bank account is hit with, I'm imagining, let's say $20,000. The next day, you use those funds to pay for whatever you need to pay, and you end up having one day later only 5,000. you do have to report the 20,000, even if they stayed in your account just for a day. I know it is, it sounds a little bit strange, but it is what it is. And you shouldn't worry too much about it, because it is just one of those reports that it's just for disclosure purposes. It's informational report. Nothing goes to your tax return. It doesn't have any effect on your taxes owed. It's just to confess, to report that you do have these assets. And don't forget that the amount should be reported in US dollars. So this would be tricky, because if the foreign exchange rate varies and you are close to the threshold of 10,000, year over year, you may fall into the category of having to file just because of the exchange rate. So it is a point to consider. So into closing, in the end, I want to say a few words about the software. And specifically, I saw a question also on this topic. So what would it cost me? How you do it? I do recommend that you try our MyExpatTaxes software, even if you don't end up using it. You will be asked to pay at the end. So you should try it. At least you will get a feeling how it works. It will make you think, and for items you probably didn't think about, you'll be prompted for some things. I would say you probably will know more about what you need to report, what's not, even if you decide not to go that way. If you have a basic situation, let's say just wages, this is not an exaggeration. I would say you can definitely file in as little as 15 to 30 minutes. If you do feel there are 3 levels of support that we offer. If you feel confident that you can do it yourself, and I am sure you can choose the do-it-yourself support level. It's the basic one. It's 149 euros as of this date. But if you feel you need more help, there are 2 additional levels of support. It is the professional and premium level, where you can ask one of us to help you through the process. You can ask all kinds of questions. You can ask for, we will review your entries. We will compare your entries with any original tax documents you upload for us. We'll advise you on anything that's probably not optimal, although I would say even if you use the do-it-yourself version, it is designed in such a way that it will take automatically the most beneficial choice for you. Just make sure to reply as much as you can to the questions you are asked. Again, the FBAR and the FATCA disclosures are included, and they are not charged in addition to any. They are included in the basic package. It's irrelevant which one you choose. And one very important point at the end is that you can e-file with us. You can e-file in, I would say, 99% of the cases, regardless of your tax filing status, because there are many cases where if you are an expat and you are filing merit separately, some softwares cannot e-file for you. And this would be important, especially if you do have, if you are expected to get a refund. Especially in these cases, you would probably want to e-file, because if you send a paper mail return, it will take a lot of time for the IRS to process the refund. I think that's most of it, what I wanted to share with you. I'm sure there are a lot of questions. I see a lot of them. I will try to reply everything. One more thing, again, you can join, this is a Facebook group you have. It's called US Expat Tax Support. And it's a very active group. We do ourselves reply to questions in this group. So it's a very good source of knowledge for expats. I do recommend it, even if you don't use the software again. And you will get a discount code. Again, don't try to memorize it. You will receive this code if you want to use the software. And I will stop sharing here, and we can address questions.
Thank you, Milena. Let's start with a question that you touched on in the last slide about converting from the foreign currency to US dollars.
Mm-hmm.
Do you convert using the date on which you file taxes, or do you use the conversion rate on the date that you received the payments?
Well, the IRS has stated that they will accept any FX rate that's officially published. But if you want to be precise, you can use the FX rate at the date of the payment. But it's in many cases impractical, especially if you are, even if you are a salarized employee, if you receive wages every single month, it's just not needed. We do use, and we recommend using the IRS average exchange rates, and this is absolutely acceptable. Unless you think this will put you at a disadvantage, which I don't believe. So the IRS average exchange rates would be my recommendation.
Okay. That's one question answered. There's another question that a lot of people have upvoted here. But before I get to that one, they ask for a detailed list of everything that needs to be accounted for. But somebody else also asked whether they need to include anything that they're reimbursed for. So if I pay out of pocket and the commission pays me back for that, do I need to include that reimbursement?
Yes, if you are reimbursed, you are paid. So it's not you who pay, so it's not an expense, it's probably an income for you. So it's a part of the grant, stipend, scholarship. I don't know the details, but yes, if someone pays for you and you pay someone else, it is income.
Okay, and then the main question here is what all needs to be included: the stipend, the travel allowance, other allowances for food and transportation. How much of everything?
Everything you received as a grant, everything, the gross amount should be included. There is no exception. Everything has to be included. The only exception would be, again, if you are pursuing a degree, so in a qualified educational institution, if you are, I would say, if you study for your master's degree, let's say in the Bocconi, in Italy, in Milan, and you got a scholarship about that, and you can, in such a case, deduct your expenses for the tuition, for books, but everything else, if you received one gross amount and you can exclude part of it because you are pursuing a degree at a qualified educational institution, still the amounts that are not for qualifying expenses, let me give you a list of what are qualifying expenses. These would be tuition fees required to enroll or attend at an eligible institution, course-related expenses, books, supplies, equipment that are required for the courses by everyone. So what is not included? So what is taxable, so you cannot exclude it, is any amount you received for room and board, for travel, for research, even clerical help, equipment that is not required for your enrollment, you just decided to use it. I'm hoping this is clear. The main message would be there are very few cases where you can skip and deduct something from the amount of the grant, scholarship, or fellowship you received. I would say it's nearly impossible for someone abroad. I'm sorry to put it that way, but it is what it is.
And for all of these amounts, the travel grant, the fellowship, the scholarship, if all of that is below the threshold, you still need to file that, right? There's no out just because it's below the threshold.
No, if it's below the threshold, for example, if you are a single filer and all of these amounts together are less than 12,000 US dollars, you don't have to file. You don't have to.
Okay. Let's scroll through and see another question here. So for those who have received salaries and grants, a salary from their teaching assistant job in Austria, and the travel grant, for example, from Fulbright Austria, how do they file these? Do they need to be filed in some way separately? Do the amounts still go together?
Again, if the grant is probably not for pursuing a degree, so it will be a taxable grant, and they fall in the same bucket. You can, if you use many tax software, ours or others, you will probably be asked for the name of your employer or whether these are wages, and you can separate them. You can say one is wages from whatever, the other one is a taxable grant. They will go in the same bucket. They will be reported as wages. If you are trying to do this yourself, you can just lump them together and report them on line 1 on your 1040 return as wages.
Okay. Another question related to the wages that people receive abroad. When they're not receiving a W-2 form, do they use the Schedule 1 form instead?
If they don't receive a W-2 form, they should, I guess they are asking where should I, on the tax return, where should I put my wages? You should still report them. Let me open the. So if it's it depends. If it's a grant, if it's a scholarship or fellowship, you still have to report them in the wages line. You just have to make one to write down scholarship just as a statement on the same line to the left of the number. If you do have actual wages, again, you do report them on line 1A on the tax return itself. If you do have taxable scholarship, maybe this is maybe it's the question is a little bit coming from, I guess, someone reading the instructions for scholarships, because there is on Schedule 1 there is a line that says taxable scholarship and fellowships, but this is not for Fulbright grants. It is, you have to report everything as wages.
Okay. To circle back to the income tax threshold, the 12,000 threshold, is that just the money earned abroad or the gross income total earned?
So the total earned income abroad
Meaning if they earn some in the US, and that amount, if they earned the money abroad and that amount is less than the threshold, but they also worked in the US that year and that amount would put them over the threshold. So would they need to combine those two
Yes.
in the,
Definitely.
okay.
Yes. Definitely. Anything coming from anywhere is added together.
And then we have a follow-up question. I thought you said earlier that if my income from all sources was under 12,000, we still needed to file but not pay taxes. But you just said we don't need to file, which is correct.
No, I'm sorry if I confused you. You don't have to, but you can if you want to, because especially if you are eligible for a refund. So if all of your income combined from all sources, foreign and US, is below the, let's say, 12,000 threshold, if you are single, you don't have to file. What I was saying earlier, you can file if you want, especially if you are eligible for a refund, because for the recovery rebate credit, the stimulus payment for 2021 and 2020 tax year, there is no other way for you generally to receive it unless you file a tax return. That's what I'm saying.
Okay. Hope that clarifies for the person who asked the question. Next question, for tax year 2022, in their particular situation, they say we would not be able to claim the foreign earned exclusion because we were not physically out of the US for 330 days, correct?
If you were not in the US for 330 days,
not physically out of the US for 330 days.
Yes, you will not be able to use the exclusion. But again, I would want to make it clear that these 330 days don't have to be in the same calendar year. That's why I gave the example, and let me give it once again. Let's say if you move abroad, if you moved in on the 1st of August 2022, obviously there are no, you have been out of the US for less than 330 days in tax year 2022. This means that you can't use the exclusion yet today. You have to wait until 1st of August this year, because then you will qualify for the exclusion and you can use the exclusion to exclude the income you were able to exclude, so the foreign income that falls in the 2022 year. I know this sounds confusing. That's why I do recommend that you try to use the software even if you don't end up using it, because it probably will become a little bit clearer when you are forced to reply questions, fill in the travel data, and you will see in the end, do you owe tax or not?
Okay, next question that had a lot of upvotes. Fulbright deposited my income into my foreign bank account. Does that mean I have a foreign income obligation? Or because Fulbright is a US institution, it's considered a US income obligation?
Okay, can you repeat the beginning of the question? Sorry.
Fulbright deposited my income into my foreign bank account. Does that mean I have a foreign income obligation? Or because Fulbright is a US institution, it's considered a US income obligation?
Okay, I guess the person asks this question in relation with the FBAR reporting requirement. And if the money have been transferred to a foreign bank account, yes, you do have to report this foreign bank account on your FBAR. You are reporting the foreign bank account. What you report on the FBAR, if you open the form, you report the account number. So it's an IBAN if it's in the European Union. you report the name of the financial institution, you report the address of the institution, your personal details, social security number, and the maximum account value. So as soon as you got any transfer and you open the foreign bank account that exceeds the filing threshold, yes, it is absolutely relevant where the transfers are coming from.
Okay, next question for you. In the foreign earned income exclusion example that was provided, can we simply apply the FEIE to 2023 taxes rather than waiting to file 2022 taxes?
The exclusion would apply if you stay long enough in the foreign country. So it can relate to both. So let's say if you moved on the 1st of August 2022, you have to wait to file your taxes for 2022 until August 2023. That's one. And then you can exclude your 2022 income that's foreign for this portion that you were abroad in 2022. And if you continue to stay abroad and satisfy the physical presence test through 2023, you can use it, and this period can overlap with the one you already used. So when it comes the time to file your 2023 taxes in the beginning of the calendar 2024 year, you can use any period, any 12 consecutive months that you satisfy the condition to have been abroad for 330 days. So you can still report the period from January 2023 to August. It's totally acceptable.
Another question related to the foreign earned income exclusion. If I am filing my taxes jointly with my wife, who is also on a Fulbright, do both of us have to pass the day limit? How do I calculate this if we had different days in the US during our year abroad?
You do have to calculate the days separately, regardless of the fact that you file jointly, because the foreign earned income exclusion would be separate for each one of you. So there are how in practice the exclusion works. There is a form attached to your return. It's form 2555, and there will be one for you and one for your spouse. So it's totally not a problem, but you have to make sure that you report the income for yourself and for your spouse, and count the days separately. It can be different for both of you. One can qualify, the other can be disqualified on a joint return. It's not a problem. You can use different dates, definitely.
Okay, switching over to state income tax now. In the US, you have to pay state income tax for the state you live in. Do we just not have to do this for income earned abroad?
Now, state income taxes are tricky in this. Whether you need to file state income tax return depends on how the state, if the state considers you are their resident or not. And some states are the so-called sticky states. So each one has their own requirements, who is a resident and who is not. And some are famously hard to leave, like California, for example, New York, Massachusetts. You have to have made significant or at least some obvious effort to leave the state if you want to claim you are a non-resident of the state or a part-year resident. And why I'm saying that? Because if you are still considered a tax resident. So mainly the state would think about where are your living interests? Do you really moved out of the state long term? So if you have a property in the state, did you rent it out? What did you do with it? Did you put your belongings in storage? Did you sell your car? Are you still voting in the state? Those kind of things, they are some ridiculous, even subjective. I have seen someone audited and asked, did they take their pets to the foreign country or not? so you can say, did you move out long-term indefinitely or not? For some of the states, you should be mindful to do that, especially, again, California, New York. And why? Because if they still believe that you are a full year resident in the state, if you didn't make enough effort to move out formally of the state, they will still believe that you are their resident, and they tax their residents in the same way as you are taxed on the federal return. So they will want to tax your worldwide income. But the bad news is that most states do not honor tax treaties. They don't have foreign tax credit. They will only allow credit for taxes paid to another state in the US, but not to a foreign country. And there are some states that do automatically honor and apply if you use the foreign earned income exclusion, but these are exceptions. Most of the states do not, and you will end up paying a lot of state tax. On income, you never step foot in the state to earn. So that's something about you should probably think actively if you want to claim yourself non-resident of the state, or even part-year resident in the year you move out. I hope this make it a little bit clearer, but it's an important question. Thank you for it.
We got a question that came in related to one of your previous answers. So going off of what you said earlier, if my foreign bank account never exceeded $10,000, do I still need to report it?
No, you don't have to. You don't have to, but don't forget that it's not, if you have a few bank accounts, and it is the cumulative value of the bank accounts. So if you have one bank account with 5,000 and another with 6,000, you still have to file both accounts because they together exceed the 10,000 threshold.
Okay. And do people still need to, do they need to state that they moved when filing their taxes? For example, if somebody lived abroad for 9 months, but their home and permanent address hasn't changed, how do they need to deal with that situation?
The mere fact that you still use your US address in a state that does impose income tax doesn't mean that you have to file, or it doesn't make you a tax resident in the state. There are other considerations. It's just one, but it's definitely not the decisive one. You shouldn't worry to use a US address on your federal return or even on your state return. I do see many people worry about that. You shouldn't worry about that, and you should worry about making sure that you use an address where you can actually receive your mail. So there is someone who gets mail for you, because if the IRS sends you a letter, and they will always send you a letter if they want to tell you something, the IRS will never ever send you an email or call you on the phone. If you do receive such an email or a phone call, be sure that this is fraud. Please be mindful about that. So you have to make sure that you use an address that is an address someone really checks for you, or you are physically checking yourself so you can get your mail. And no, you shouldn't worry about that. It is said on the 1040 form, this is addressed for correspondence. Yes, it is. I do understand why it's concerning for state taxes, but I wouldn't be worried about that too. If you can otherwise prove that you moved with the intentions to stay long term abroad, you did take your family with you, you did some of the other things that I mentioned earlier to show that you really moved out of the state, you can still use your address in this state.
Okay, next question is for you specifically, Milena. Because we've been going with the questions for a while and still have several. Are you okay with another 15 minutes of questions?
Yes, please.
Okay, so for everybody else, we'll try to get through as many as possible. So part of this next one you've already answered, but I'm going to read the whole thing in case the first part is relevant. I pay Austrian taxes on my USTA income. My income is paid in euros to my Austrian bank, and my total income is less than $12,000 a year. How do I figure out my income considering the exchange rates, which this one you've already answered? And the next part is, can I get a refund on my Austrian taxes since I also file in the US?
To get a refund of your Austrian taxes, you have to file a tax declaration in Austria. So the US will not give you a refund for any foreign tax you paid. So they can give you a credit if for the same income you owe tax in the US, but they will definitely not refund you for something you paid in Austria. So please be mindful about that. And it might be a good idea that you do file your taxes in Austria, because if you are below, I think in Austria, I'm not authorized, by the way, so just take this as a tip, not as a tax advice, because I'm not authorized to give you Austrian tax advice. But I think this just as a suggestion, that the threshold for the first 11,000 euros, the Austria are tax-free. So if you were already withheld taxes, it might be a good idea to do that in Austria, because they probably will give you some money back, if not all of them. But
all right,
not in the US.
So the next question is about payments made in December, payments for work done in December, but that are received in January. Is that income included in the 2022 return or in the 2023 return?
If you were an employee and you were paid in January, this is January income. So it will be reported next year. Remember, individuals are cash basis, use the cash basis accounting method, if we can say so. So you do report income when you receive it, even if you perform the work in December.
Great. Next question is regarding FBAR. What if we have an online multi-currency transfer account, such as with Wise? Is that considered a foreign account?
This question is, I get it so often. I hope I could give you a direct answer, but unfortunately I can't. You should reach out to Wise to ask them where your money, if you have a US bank account with Wise, most likely they hold these US dollars in a US bank account, but it's not guaranteed, especially because Wise has to have different representative offices around the world, and they have to be registered as a financial institution. They have I think they do have one in Ireland for Europe. I don't know where they are registered as a financial institution in Europe, but it is possible that they keep your money in a bank outside of the US. So I am unfortunately unable to tell, but one tip for you, if you open the Wise account while you were still in the US, I can guarantee you that these money are held in a US account. I would be worried, and I would double check with Wise to ask them if you opened the account later while you were still abroad. I don't know where and why I assumed it's Europe. Sorry, because I'm in Europe.
Okay, a different question. Let me see where it was. If you are both researching and teaching, which category applies? If the money you receive is for doing both activities.
They are both compensation. They are both wages. Both wages.
Okay. And that answers one of these other questions.
They are taxed in exactly the same way as ordinary income and fall into the wages category. Unless the only exception would be very rare when you have to do research as a part of, again, graduate program, and it's mandatory. It's a condition for you to graduate, which would be rare, I assume.
I'm not sure. That might differ from country to country. Okay, so this other question has also then been answered. Let's see here. How do we qualify for the FTC? If your US income would push you over the limit to pay taxes abroad, would that then qualify you for FTC?
If your US income pushes you to pay taxes abroad, so I'm trying to figure out how this would happen. So you probably mean that you are a resident in a foreign country, you have foreign income from the US that you have to report to this foreign country, because as a tax resident in a foreign country, you have to report to this country your worldwide income. And that's why you have to pay tax in the foreign country. In such a case, yes, you can use the foreign tax credit, but I'm really not sure that I get the question right. If you want, just please follow up.
Okay. While they're possibly following up, let's go to another question. For the foreign earned income exclusion, does fully relocating in a foreign country, meaning leasing out a US home, having kids attend foreign school, etc., does that qualify for having a foreign tax home, even if the income is from a US university? And if so, does that have anything to do with being a tax resident and paying taxes in the foreign country?
If you do move out to a foreign country with your family, you become a tax resident in the foreign country. Yes, it will be, you will be having a tax home in the foreign country. And yes, the fact that you get the amount, the grants from US sources is irrelevant. If this is income you are paid for compensation services, which is wages in most cases, these wages are sourced where you are. If you are physically in a foreign country, this is foreign income. You don't have to worry where the payer is located. So definitely, yes, you can use the foreign income exclusion, and you do have a tax home in the foreign country.
Another clarification question regarding the foreign bank account. It means I never at one moment had 10,000 in it, or that the total amounts deposited in 2022 total equal or over 10,000?
It is over 10,000. But if you have to stick to the word of the instruction for the FBAR, but it's over 10,000 US dollars. So just be mindful, because it's a common misconception, and you have to transfer the amount into US dollars, and the exchange rate for the FBAR is the year-end exchange rate of the US Treasury. It's not the average exchange rate we use for reporting income on your tax return.
So if I always made sure to keep my account at 9,000, spent some, more money came in, spent some, but I never actually exceeded 10,000, then I don't have to say that I had 20,000 in my account that year.
Yes, yes. If you never exceeded the maximum, you don't have to worry about the FBAR.
All right, let's get to some other questions here. Does MyExpatTaxes assist with filing taxes in a foreign country?
No, unfortunately not yet. We are aiming to, but as of these days, no.
Will MyExpatTaxes provide forms for money earned in the US? For this person, my grant started in September 2022, so all money earned before was earned in the US.
If forms for, if you mean MyExpatTaxes would provide you with original tax documents, no, we are not. We will be expecting you to give us your tax documents. So what I mean by that is, if you have a W-2, which you of course you don't have for a grant, but let's say you were employed before that in the US and you have W-2. If your question is, are we the ones who can prepare for you sort of a W-2 for this portion of the income that you don't have a W-2 for? No, definitely not. We can help you figure out if you don't know. We can guide you through the process if you don't have a document, how to figure out the amount of the gross income. If you have the grant authorization agreement, etc., but we are not engaged in filing the original US tax form. So any W-2, 1099 form for investment income, for pension income, K-1s, if you are a partner in a US partnership or S Corp, all these documents have to be already filed for you from the payer, whoever paid you for the respective type of income. I hope I succeeded to address this question.
Let's see if there's anything that just came in.
Yeah. Otherwise, all other forms that are required to be included on your US tax return will be handled by MyExpatTaxes. These are the 1040 forms, schedules 1, 2, 3, 4, 11, 16 if you use the foreign tax credit, 25, 55 if you use the foreign income exclusion, any tax treaty forms, any additional statements and worksheets, everything, plus the FBAR and the FATCA forms will be included and prepared from us.
A question that is relevant to alums who may have stayed past their grants for several years. Could you explain again the program mentioned about back reporting previous year incomes for expats not knowing that they need to report?
Yes, this is the called streamlined offshore procedure, and it's offered by the IRS exactly for this specific reason, because there are expats who simply didn't know that they have to file US tax returns while they are abroad, and it comprises of what you have to do to use it. You have to file your tax returns for the prior 3 years. For example, if you decide to do it today because you didn't file for several years, you have to file for the tax years 2019, 20, and 21. This will be your streamlined package, and you have to file for the current year you file for is tax year 2022. So you will need to file for 2022 and the prior years before. And in addition to that, you have to make sure to file your FBARs if you have to. If you have to file FBARs, if you exceed the threshold for filing FBAR for the prior 6 years. So these are the requirements to satisfy the streamlined foreign offshore procedure. If you do so, the IRS will what's the benefit of this program? It is first, if you didn't file but you missed out on refunds, you will get the refunds. Second, you'll get compliant because the IRS will promise to not look past those 3 years. So you forget everything about the prior years, the years before 2019. You don't have to worry about them. If you do that, they will never ask you to file those years, even if you didn't, if you follow the procedure. And in addition to that, even better, if you are a filer who ends up owing US tax, the IRS will only charge you interest. They will not impose penalty for late filing, for late payment. So it's a great program. If you want to get compliant, I do recommend that you use it. We offer it in MyExpatTaxes, so you can do that with us. There is one additional, if you decide to do it yourself, there are some specifics, but there is nothing different than preparing a general tax as usual, as you would prepare your tax return. For the current year, there is just this specific that you have to add one additional form, which is to claim that you do claim this specific offshore amnesty program. And you have to include one statement at the top of every tax return that's for a prior year, that it's foreign offshore tax program. And the third, maybe a little bit specific thing that you have to have in mind if you do decide to do this yourself outside of us or any other tax preparer, if they don't help you. These 3 prior years need to be signed with your original wet signature. This is very important, and I have seen streamlined returns being returned, not rejected, but returned to the client for signature because they use the digital signature and just printed out the forms. And they have to be paper mailed. You cannot e-file the streamlined package. You can still e-file the current year, and the current year is 2022, but the prior 3 years, which are the so-called streamlined package, you have to mail. And these have a specific mailing address for the program, dedicated for the program specifically. But it's a great program, so I do recommend you do it.
Next question for you. Is the deduction for compulsory accident and health insurance included in taxable income?
Is the deduction? Is it for the deduction? The deduction is a deduction. It's not taxable income. If you do ask about if you can deduct from reporting your gross income something you pay for health insurance, no. You have to report the gross amount, including everything you paid for Social Security abroad or in the US. The gross amount is gross before any deductions.
Okay, and one final question for you. Is it recommended for USTAs to apply for Austrian tax refunds before or after filing for US taxes? In other words, to what extent does the money that USTAs will get as a tax refund in Austria impact their reported income in the US?
This would be a relevant consideration if you do use the foreign tax credit. If you use the foreign earned income exclusion, so if you didn't pay enough foreign tax in Austria to use the foreign tax credit, you don't have to worry about that. Just file your Austrian taxes whenever you want. If you intend to use the foreign tax credit because you know that you paid probably enough tax, if you paid tax at all in Austria and you have more than 11,000 gross income in euros, you probably can use the foreign tax credit. It makes sense. I would say the sooner the better you file your taxes, because you can align your US and Austrian tax returns, because in Austria, you know, you can file your taxes 3 years after the fact, and it is not the case in the US. So the sooner the better. But it's not mandatory. I wouldn't say you should worry so much about that, because even if you don't take your time to do whatever you need to do in Austria, just make sure to do it so you get any refund you are entitled to. And if the amount of tax you claimed, even if you claimed foreign tax credit, and in a later year you get a refund for the same year, you would just amend your tax return, or there is a way to take care of that in the following year. You don't have to worry yourself too much about that. Just do it whenever you can to get your money back if you are eligible to.